Welcome to Darasa Online. My name is Kevin Nkwela. I'm accountancy teacher. Today we are proceeding with the topic of the nature and the context of accounting. Last time when we met, we discussed about the concept of accountants, accounting information or financial information, users, and basic accounting principles. Now today we are discussing about books of prime entry. So our coverage will be books of prime entry. Of course, we will discuss 5 of them, and I will see that next time, and another one will be discussed next time when we meet. Now, I'm expecting that at the end of this revision, student will be able to enter transaction in the books of prime entry. Now, what is a book of prime entry? A book of prime entry is a chronological record of business transaction arranged according to type. For example, cash or sales. The books are then used to generate entries in double entry bookkeeping system. Other names for book of prime entry is a book of original entry, journal, day book, or subsidiary book. Now we have various types of books of prime entry. Now the main one is cash book, and the cash book used to record cash and the bank receipts and the payments. Then we have sales day book. This is used to record credit sales. We have purchases day book. This is used to record credit purchases. We have purchases return day book, used to record goods returned to suppliers. We have sales return day book, used to record goods returned by customers. And also we have general journal or journal proper, used to record other transactions which, owing to their nature, cannot be recorded in the books mentioned in the above categories. For example, purchase and sales of non-current asset on credit, correction of accounting errors, writing of bad debts, and for recording opening and closing entries. So now let's start to write entries in the books of accounts. Now let's say this question first, then we'll start to write. Our lesson 2 illustrative question. The following information appeared in the books of TBL Limited on 31st January 2018. During the month of January, the following transactions took place. 1st January, TBL Limited commenced business with the Tanzania shillings 500,000 cash into bank. On 2nd January, bought goods by check Tanzania shillings 200,000. On 6th January, bought goods on credit from Babago at list price 750,000 Tanzania shillings, less trade discount 20%. On 7th January, return goods costing Tanzania shillings 50,000 net of trade discount to Babago. These goods were bought on 6th January 2018. 7th January, the same day, bought goods on credit from Jaluo, Tanzania shillings 350,000. On 8th January, we bought goods on credit from Chelewa, Tanzania shillings 800,000. On 10th January, cash sales paid direct into bank, Tanzania shillings 500,000. On 13th January, sold goods on credit to La Ala, Tanzania shillings 575,000. On 14th January, bought goods on credit from Limomote, Tanzania shillings 700,000. On 15th January, bought goods on credit from NASA, Tanzania shillings 250,000. On 18th January, sent an invoice to Masuka for goods sold at a list price of Tanzania shillings 500,000, less 10% trade discount. On the 20th January, sold goods to Lotani, Tanzania shillings 900,000. On 21st January, sold goods to Pepekale, Tanzania shillings 600,000. On the 22nd January, send a credit note to Masuka for goods returned with a list price of Tanzania shillings 44,400 and a trade discount 4,400. On 27th January, issued a check to Chelewa in settlement of amount outstanding less 5% cash discount. On 7th January, sent a check to Babago, Tanzania shillings 500,000 in settlement of Tanzania shillings 550,000. On 28th January, received a check from Masuka in settlement of balance outstanding less Tanzania shillings 20,000 cash discount. On 29th January, a check received from Masuka was dishonored by bank. Record the given transactions in the sales journal, sales returns journal, purchases journal, purchases returns journal, and a cash book. Now we will go one by one and we will enter to the respective books of prime entry. Now, if you can see in this question, of course, in the cash book we have only two columns for discount and bank account. We don't have cash column, so we'll have debit. We'll have discount for discount allowed and received plus a bank column. So we'll start with the cash book, then we'll come to purchases journal. So let's open this two column of the cash book, and this is now a solution. So 1, debit cash book. So credit. So this is the date column, details, discount. This is discount allowed. Discount allowed, and then we'll have the column for bank. Now this is also debt, details, discount. Now it's a discount received, discount received. Then we'll have the column for bank. So of course here now we have that details, discount allowed bank, and also in the credit side we'll have the same column. Now, as I said earlier, the cash book it's used for bank for cash and the bank receipts and the payments. So on the 1st January, TBL commenced or started business with the 500 cash into bank. So that one now is the capital. So we are going to debit bank and credit capital. So we write it on the debit side. So the year here, it's 2018, 1st January, capital. Now we have the column for discount and the bank. So we'll post it into bank. Then on the 2nd January, we bought goods by check. So if we bought goods by check, we are supposed to debit purchases and credit bank. So we are going to write on the credit side. So we write here 2018, 1st of January, purchases, it's 200,000. 200,000. On the 6th January, bought goods on credit. This will be entered into purchases journal. On 7, returning goods. This will go to other journal books. On 7, we bought goods on credit. This was for purchases journal. We bought goods on credit from Chelewa. This was for purchases journal. Then we have the transaction which is supposed to be entered in the cash book. And this is a cash sales paid directly into bank. So we debit bank, we credit sales by Tanzania shillings 500,000. So we write now on the debit side, and this one was on the 10th of January. So we write here 10th of January, sales, this is 500,000. So we are finding out the transaction which are related into the cash book. So we sold goods on credit, that is the sales journal. We bought goods on credit, that is purchases. We bought goods on credit from NASA, purchases. Sent an invoice, this is the sales journal. Sold goods, sales journal. Sold goods to Pepekal, sales journal. Send a credit note to Masuka, that is return inwards. Then on 27, we have issued a check to Chelewa in settlement of amount outstanding less 5% cash discount. So you are supposed now to check the amount which is outstanding to the Chelewa account. Now the outstanding amount to Chelewa, it's 800,000. Now we are deducting 5%, and that one it's a discount received. So 800,000 times 5%, it's 40,000. So 40,000 is a discount received. So we are paying him 760,000, and we will receive the discount of 40,000. So we are going to write on the credit side. So we write here on 27th January, Chelewa. The discount is 40,000, and the amount into check is 760. Yeah, on 27th January, sent a check to Babago, Tanzania shillings 500 in settlement of Tanzania 550. So 50,000 will be also discount received. So we are going to credit the bank, and also we are going to write in the column of discount received 50,000. So the same date. So we write 27th of January, Babago. Discount received is 50, and the amount of check is 500. Is 500. Now on 28th, we received a check from Masuka in settlement of balance outstanding less 20,000 cash discount. Now remember that we received goods from Masuka, that is return inwards, amounted 40,000. So the amount outstanding, it's 410,000. So if we less 20,000 cash discount, will be 390,000. Now 20,000 now is a discount allowed. So we are going to debit bank and credit Masuka company. So we write here now on 28th January, Masuka company. Now the amount of discount allowed is 20,000. The amount of discount allowed is 20,000, and the amount which we have received now is 390,000. So that is the amount which we are going to record. Now on 29th, a check received from Masuka was dishonored by bank. We deposited, but bank dishonored our check. So we are going to reverse this entry by writing on the credit side. The same amount now will appear on the credit side. So we write here, this is on 29th January. We write here discount Masuka company. We write the same figure of discount. Now will be discount received 20,000, and also the amount which was dishonored into bank, that is 390,000. Okay, so we are through with the cash bank transaction. Now we are supposed to calculate the difference to be a balance scale down. Now if you add well, of course this side is bigger than this side. So our balance scale down now will be on this side, and that is there is the overdraft. So we write here, this is January, we have 31 days. So we write here 31 of January, balance scale down. Of course, the total bank the total bank into credit side, the total is 1,850,000. So if you deduct 500,000 and 390,000, you remain with the 460,000. So we write here 460,000. So the total now, of course, there's no balance for discount. There's no balance for discount. So total discount allowed is 20,000. And here now the total is 1,850,000. Now here, the total discount received, it's 90 plus 20, it's 110,000. So 110,000, and here the total will be the same with this one. This is 1,850,000. So our balance brought down now will be on the credit side to show the overdraft. And this is February now. 1st of February, balance brought down. It's this overdraft of 460,000. So this is our cash book and a special bank column. Now let's move to another book of journal, and that is now purchases journal. This is now purchases journal. This is number 2 now. Purchases. So into purchases journal, we have 3 columns. We have column for debt, we have column for details or particular, and we have column for amount. So we write here debt, details, and here it's amount. Okay, we've seen that purchases journal is used to record the credit purchases. So we'll just take only credit purchases to write into the purchases journal. So we start with the 2nd January, where we bought goods by check. This is we bought goods by check. So that one was already entered into cash book. But on 6th January, we bought goods on credit from Babago at a list price of 750,000, less trade discount 20%. Now, trade discount, it's a discount whereby used to negotiate the purchasing price. So we just deduct it, and they will not be entered in the books of accounts. So if you take 750,000 multiply by 20%, you'll get 150,000. So 750,000 less 150,000 will remain with the 600,000, and this amount of 600 will be entered into purchases journal. So we just write here the year is 2018, and this is now on the 6th January. January 6th. So our workings or calculation will be shown into details column. So we just write January 6th. This is Babago. Purchases was purchases is 750,000 less 20% trade discount. Trade discount, just initials, trade discount, or just right here, less 20% trade discount. So the 20% is 150,000. 150,000. So the amount now, this one minus this one is 600. 600,000. So that is the amount which will be in the invoice. Then we go to on the 7th, where we bought goods on credit from Jaluo, Tanzania shillings 350. Here we don't have a trade discount. We just write the figure. So this is on 7th January. Okay, it's already written January. So we just write Jaluo. We just write Jaluo. And the amount now is 350,000. 350,000. Then we go to 8th. We bought goods on credit from Chelewa, Tanzania shillings 800,000. There's no trade discount here also. So we just write the amount directly to amount column. So this is the 8, Chelewa. The amount is 800,000. 800,000. Then on the 14th, we bought goods on credit from Limomoti, 700,000. Now this amount, I mean, there's no trade discount in this transaction. We just bought goods on credit from Limomoti, 700,000. So we just write here 14th, Limomoti, Limomoti 700,000. Then on the 15th, we bought goods on credit from NASA, Tanzania shillings 250. We don't have a trade discount here. We just write it directly to the amount column. So we write here on the 15th, then NASA shillings 250,000. Then we don't have another transaction relating to purchases or purchases on credit. So we just added this total, and the total now will be transferred into general ledger into purchases account. So the total here, if you add it properly, you'll get 2,700,000. 2,700,000. Now this total will be transferred at the end of the month, that is on 31st, transferred to purchases account, into general ledger. 2,700,000. So we are through with the second book of original entry. Now we are going to the third one. Now the third one now will be purchases return. So the third one here, purchases purchases returns journal. We'll have the same column like here. So we'll have the column for debt. We have a column for details. We have the column for amount. Now, on January 6, returning goods costing 50,000 net of trade discount to Babago. These goods were bought on 6 January 2018. 6 is this one. So we're returning goods to Babago. Okay, goods worth 50,000. Net of trade discount. It means that we've already deducted the amount of trade discount. So 50,000 now is coming from this amount of 600,000. So we return now these goods to Babago. So we don't need to calculate again. We just write here the return. So this is 2018. The amount, debt is January 6. We return goods to Babago. The amount is 50,000. So we don't have another return. And this amount now will be transferred into general ledger, into the account of purchases return accounts. Another name for purchases return is return outwards. So you can either write return outwards or you can write purchases return. So we transfer this on 31st January. So we write here transferred to purchases returns. Purchases returns account into general ledger. The total amount, of course. The fourth one is a sales journal. Of course, sales journal, this is number 4. Sales journal. Okay, we'll have the same column for debt, details, and the amount. Our year is the same, that is 2018. So on 13th of January, we sold goods on credit to La Ala Tanzania shillings 575,000. We sold goods, no trade discount, no what. So we just write here that debt, that is January 13, La Ala. Now La Ala, of course, will go to debtors. The amount is 575,000. Then on your 18th, we sent an invoice to Masuka for goods sold at list price of Tanzania shillings 500,000 less 10% trade discount. So we sent an invoice to Masuka. So Masuka is our data. So we write now on 18th January. We write here on 18th January. We write Masuka less it's 10%, less 10%, less 10% trade discount. Trade discount. Trade discount. Now the amount of list price is 500,000. 500,000. So we less 10%. Now 10% of 500 is 50,000. So we less here 50,000. So the net or the amount which will be shown in the invoice is 450,000. 450,000. So we still have other debtors. So we proceed here. This is a debt column. Is a continuation. Is a continuation. So that is on 18th. Now we are going to 20th. 20th, now we sold goods to Lotani 900,000, and on 21st we sold goods to Pepekale Tanzania shillings 600,000, and we don't have trade discount in these two transactions, so we are going to record it directly to the sales journal. So we write now on the 20th. We write Lotani. The amount is 900,000. Then on 21st, we write Pepe Kali. This is 600. So we are through with the credit sales, and therefore now we add the total credit sales. So if you add it properly here, you'll get 2,525,000. So this amount now, at the end of this amount represents credit sales for the month. And therefore, we are transferring this total to general ledger into sales account. So we write here 31st, transferred to sales account in general ledger. So we are through with the sales journal. Now we are going to the last journal, that is a sales returns journal. Sales returns journal. The fifth one now is a sales returns journal. Now on 22nd January, send a credit note to Masuka for goods returned with the list price of Tanzania shillings 44,400 and trade discount Tanzania shillings 4,400. So 2018, January 22, this is a Masuka. So returns, the list price was 44,400 less trade discount, 4,400. So the net one is 40,000. So at the end of the month, that is 31st January, we transfer this. So transferred it to sales returns account, sales returns account in general ledger, the total. So we are through with all 5 books of original entry. Now these are creditors. We have Babago, Jaluo, Chelewa, Limomoti, and Nasra. Now this will be posted to purchases ledger on the credit side. And to complete the double entry, the total purchases account will be posted to the debit side of the purchases account in the general ledger. Then purchases return. Now the total will be credited into general ledger, into the account of the purchases return. So we will credit purchases return, but Babago now will be debited by 50,000. Says Jono, we have la ala Masuka Lotani Pepekal. This will appear into debtors ledger on the debit side. The total, this will go to sales account in the general ledger. For returns inwards or sales returns, now Masuka will be credited by this amount of 40,000, and the total will go to the debit side of the sales returns account or return inwards in the general ledger. And these are double entry for this one. So we are through up to here for today. Next time when we meet, we'll proceed with the question of general proper. So if you have any question right now, you can ask. Otherwise, we'll meet next time. Thank you very much.